The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome back to today's episode of Payroll Question Time. God, it feels like ages since the last session, but you'll be pleased to see we have got a absolutely action-packed, knowledgeable, amazing ensemble here of payroll talents on the Payroll Question Time panel. So I'm super excited to welcome them all to the show to help you with all of your PQT questions. Now, of course, we are going to be tackling the question of holiday pay today. As you may or may not be aware, the government has launched a consultation following the Supreme Court ruling that holiday pay for part year and irregular hour workers can no longer be prorated. So if you have any questions, which I'm sure you will, around holiday pay, now is the time to put them in the chat box so I can put them in order and put them to our expert panel one by one. I know that since we've been running these PQT sessions, we've had so many questions related to the 12.0% pay calculation method being one element. We've also had loads of questions about salary sacrifice schemes, and that's something we're also going to be tackling in today's show. So again, if you've got any questions around salary sacrifice schemes, put them in the chat box straight away, or in the questions box rather, and I will handle those as we go through. I challenge all of you, and there's 123 people that are logging in, still more coming onto the show, so I challenge all of you to challenge this panel. Please do that. That's what makes this thing so exciting for me and entertaining, giving them the hardest questions you've got, so watching them get slightly nervous as I challenge them, but also answer them brilliantly as they always do. So you know about the questions. We are going to be running 2 polls today, so we are going to ask for your involvement in those. Please do give us your thoughts and opinions. We will obviously comment on those results as they come in as well. And we are recording this, so if you are interested in the content post session, you don't need to be scribbling around notes. We will send you a copy of the show once it has finished. Finally, there will also be a survey. Now, that survey is very much for your benefit. Please let us know what you want us to cover in a future episode. That's how we get our content. We look at what your responses say, and we try and give a show that absolutely speaks to our audience. So please do fill in that survey. Let us know what you think, and let us know what you'd like us to tackle in the future. And last but not least, I'm going to read out our legal disclaimer, which says this presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, for those of you who don't know me, my name is Nick Day. I'm the founder of the Payroll Podcast. I'm also the founder of JGA Recruitment, which is a specialist payroll recruitment company. I am a Reward 300 award winner and member. I've been in this industry now for 2 decades. I don't know where the time has gone, but I love it. And I'm so excited to have such a great panel today. So let's run through them. It's got a real behemoth PQT session today. So I'm going to start with, as I see the people on my left to right on my video screen here, with you, Lou. I wonder if you could introduce yourself.
So my name is Lou Gray, and I'm an associate director at Evelyn Partners, and also I'm on the board of directors for CIPP. And now, Nick, you're making me afraid now. I'm scared. Be gentle on me. It's been a while.
It's been a while, but you know how this works, Lou. I don't think I've ever caught you out yet, so that's still my challenge, and I'll win that battle one day. Moving from left to right to Samantha Johnson, if you can introduce yourself, please.
Hello, yeah, so I'm Sam Johnson. I'm Payroll Services Director over at Danes, and equally as terrified as Lou. Been a hard start to the new year, so be kind to us.
Fantastic. Moving from left to right, my good friend who I've actually cycled a lot of Europe with over the years, so I know this individual very well, Mr. Richard George.
Good afternoon. I'm not worried at all because any TIFF questions I'm going to give to Samantha and Lou. So I'm Richard George, Director of Education at the Payroll Centre. I wish I could say it's only been 2 decades, but it's certainly been a lot longer than that, and always been in payroll since just I started working. So yeah, all good.
Fantastic. We're moving from left to right. We've had this competition about who's been doing this the longest, and I think Andy just about edged Simon, but I'll ask Simon to introduce himself first if he can.
Yeah, well, Andy was my IPP tutor back in the days, so you see, I was probably Simon Parsons, Director of Compliance Strategies at SD Worx. I also chair BCS Payroll Specialist Group, that's British Computer Society, and Irene organisation. I'm also part of Reward 300. Been in the industry quite some time. I joined into the payroll software development community back in 1984. So I worked a few years more than that, but yes, probably giving away my age. I know I look so young.
You do look young. I was only 3 years old then, Simon. I'm giving my age away. So over to last but no means least, our pensions expert on the show as well, Andy Nichols.
Hi everyone. Yes, yeah, my background is all payroll, but I spent the last 10 years with the pensions regulator on automatic enrolment, helping the payroll industry get all that in place. And obviously, that's what I'm hoping to be able to answer any questions on, and anything else pensions connected as well today.
Fantastic. So do put those pensions questions into the questions box. We can get through those as we go. Now, we've actually had some questions emailed into us in advance of today's session as well. So if I don't ask those questions immediately, that's because they are in specific sections for today. I know we've had some questions around Freeports, holiday pay and salary sacrifice schemes. So if you don't see me ask your question immediately, it's because I've saved them for those specific sections. But let's tell you all what we're going to be discussing today. Today's topics are going to include holiday pay, of course they are, salary sacrifice schemes, devolved governments, enterprise zone relief, pensions, and if we've got time at the end of the session, there'll be a hot topics Q&A section as well. Now, before we jump into holiday pay, I suspect it's going to be a busy subject area. We're going to run our first poll of the day. So that's me asking all 146 of you to get involved if we can. The poll is, should holiday rules be left alone or should they be amended? We've got 4 options here. You can leave them alone. I didn't know about potential changes whatsoever. Don't worry if you didn't. That's what this show is all about. Bring back the 12.07%, and the new proposals have merit. So while we wait for those results to come in, let me see if I can ask a quick question to our panel that comes in on this holiday pay area. I will let the panel, maybe I'll come to you, Simon, if I can, just for clarity here. I have a worker who has expired SSP, and we do not know if he will return. He has variable pay. So how long would you use for an average prior to his sickness, for entitlement rather than pay, for clarification?
In relation to sickness, yes, or to holiday?
Oh, good question.
Okay.
Maybe clarification. Yeah. It's I have a worker who has expired SSP.
Yes. So a worker who has expired SSP needs to return for 56 days first before they'd be entitled to any further SSP, if that's related to that question. But I'm not sure if it is, Nick. And then the averaging would then be taken for the periods of time before that new sickness. Yeah. Well, now, if we're talking about what's yeah, go on.
I was going to say, well, if the person put that question in the box, if you can just confirm to me whether that's related to holiday pay or whether that's related to SSP, that'd be great. But I don't know if you have an answer. You've answered the SSP one of 56 days. If it was for holiday pay, Simon, how would your response differ?
Well, that's right. You wouldn't count the sickness weeks. You'd do normal weeks going back 52-week average over the past 104 weeks, and that would be the basis of calculating the holiday pay if they go on leave. So you don't really count the holiday periods. You count the normal weeks when they worked in accordance with some of the guidance from BAYS. I don't know if Richard's got a comment there or what he thinks, actually, because he may.
It is principle that we don't include. Well, we didn't include furlough weeks. We don't include parental leave weeks. For weekly paid, you don't include holiday weeks, and yes, you don't include absences of sickness or non-paid weeks. Other than that, it's 52 in arrear, up to a maximum of 104.
Yes. Now we do see a couple of social media questions on this one, Nick, because I know a number of employees are being told that they've lost their holiday because they haven't used it within the holiday year. Well, actually, because they're on sickness, they get an element of protection. So the holiday does carry forward. So normally 4 weeks under EU law wouldn't carry forward into a new year. But if they're absent for sickness or maternity or parental leave rights, it does. But there is some question of whether they could have taken the holiday in the year that's relevant and didn't, as opposed to they couldn't because of sickness and maternity. It's just some thoughts there. But sometimes this sort of use it or lose it is valid sometimes, but not in relation to maternity especially. And certainly long-term sick, you can't apply that. They still carry forward the right.
Sure. Well, let's have a look at some of these poll results then, because we've already had 1 to 5 questions come in on holiday pay. So we are going to have a busy panel today. Let's have a look at those poll results and see what the overall. Oh, we are 44%. I didn't know about potential changes. Fantastic. Well, that's what today is all about. But let me come to you, Samantha. What are your thoughts on those immediate poll results?
I'm surprised, to be honest, that half didn't know about the potential changes. I suppose it's one of those, if you're on LinkedIn, you've you must have seen it because it's just been everywhere. If you're not on LinkedIn, then maybe that's a reason to jump on. I'm also quite surprised that 17% say leave it alone. I think the holiday rules at the moment for people on variable pay are so complex and so difficult to get right. I'm genuinely shocked that there's anyone out there that wants to leave it alone. So yeah, probably surprised me is my initial response.
Just to bring this to interview for those that perhaps are just listening in audio only, we've got 17% said leave alone, 44% said I didn't know about potential changes, 24% said bring back the 12.07%. I think that's what I would have ticked if I was on this poll, and 15% said the new proposals have merit. Let's jump into then the holiday pay section. And on that 12.07%, what would be the main reason? I mean, from my perspective, I'm not a payroll person, I'm a payroll recruiter, so that 12.07% just makes it way simpler for me. But what would be the reason that you wouldn't go back to that method, Simon?
The predominant reason, according to the Brazil case, of course, is there's no lawful method to do that. So the principle of the Working Time Regulations and the Employment Rights Act is that it has to be based on an averaging. And I guess the element that scuppered it a little bit with Leslie Brazil and the Harper Trust is before they brought in the 12.07%, they used to do a 12-week average. So they then decided to go with 12.07% and then were challenged, especially as they cut it back for the weeks where the school closed. And she won her case. It bounced around, went to an employment tribunal and the Supreme Court, the Court of Appeal first and the Supreme Court, and they've all found in her favour and basically said 12.07% doesn't work. And there are a couple of reasons potentially why it doesn't under the current working time regulations and the Employment Rights Act. And one is because, and also it's an element of how people operate the 12.07, because sometimes I see the 12.07 operated on hours worked and sometimes on pay given, and they come up with completely different results. So equally, some put it on hours contracted, not hours worked. So they're only doing 12.07 of the standard hours. If they do extra hours or overtime, they're not. So there's an element of everybody getting on board with what the principle is, and even with this consultation of understanding what it is. But the 12.07 doesn't meet the averaging requirement, and that's what the court found. So although the principle sounds good, when you actually do the maths, it doesn't work out because it doesn't take account of the 0 pay weeks.
I think it's also, sorry, Nick, I was going to say there was a secondary situation, especially at the final Supreme Court, where under EU law, it is a more acceptable option to use an average, but obviously UK law is the Employment Rights Act, which is now the 52-week average. And the court actually said that even though it's there in the EU, the UK legislation trumps it. So you couldn't fall back on that secondary, I guess, model. That makes sense.
That's right. And in fairness, some European nations operate similar model to those. For example, I think you probably find in Ireland, it's not done on the sort of similar basis. So EU law gets interpreted into national law and it's placed into national law, and it's the national law that then sets the application of the directive. And the European judgments aren't of the directive, they're of the national law application of the directive, if that makes sense. And you can get different things in different nations.
I'm going to step in just for a moment because we're getting lots and lots of questions, which is fantastic. So please do keep them coming in. I'm just going to let everyone know how I'm going to manage these because of the volume of coming through. If we start with the 2 points we've got on the slide here, just run through the change legislation we expect and bring the Leslie Brazil case. We saw 44% of the people on the poll weren't necessarily aware of these changes. We just bring that to life first. And then what I'll do is I'll run through all of your questions without missing a single one once we've gone through those 2 bullet points, just to make all of our attendees happy with how it works. So do keep putting those questions in the box. I will get to them all. But let's start then with this first bullet point. If I come back to you, Samantha, what changes legislation can we expect?
In terms of the consultation?
Yeah.
So this is where, hands up, I have not read the consultation yet. I'm fully aware of it from LinkedIn, but I haven't got the details. So I'm going to have to defer on that one, Nick, I'm afraid.
No, that's fine. How about yourself, Rich? I know that we were talking about this
offline. So we're now talking about the consultation rather than the case, because they are very, very different things. So to give background for those who do not know anything, the sort of Brazil case took two sort of directions. One was about the pay element, vis-a-vis using 12.07% when the regulation is different, but it then moved on to actual entitlement. And principally, the whole point here is about what is a part-year worker. So we have part-time workers and you have part-year workers. So a part-time worker works 3 days a week every week of the year. A part-year worker, in the case of Mrs. Brazil, who worked for a school, works 32 out of 52 weeks. But the important aspect is that she's contracted for the year, even though she only works 32 weeks. So where the case went in relation to entitlement was that because they are on an annual or a permanent contract, they are accruing holiday in inverted commas for a year, and therefore they are entitled to 5.6 weeks holiday in exactly the same way as you or I who are fully employed. Where this therefore makes that big change is for a lot of employers where they were possibly using a part-year entitlement. All of a sudden, it's a full year entitlement, even if they don't work it. The secondary issue then is they could therefore mean that a part-year worker could be entitled to more holiday than a part-time worker who does work all the year round. So that was the aspect of the case that has sort of driven the further sort of output from Bayes, because what Bayes have now created the consultation on is saying, well, thank you very much for that. That's a beautiful decision, but it doesn't really help anyone. And it actually isn't truly how we believe to be correct. And there is this difference. So what they have now created the consultation on is on a high level is creating a holiday entitlement period or a reference period of 52 weeks. And unlike the pay, where you find 52 weeks out of 104, you just go back 52, take the weeks that they actually worked and multiply it by, guess what, 12.07% to get the actual entitlement rather than the pay. So actually saying they're not going to be entitled to 5.6 weeks if they don't work the full year. They'll be entitled to the percentage of the entitlement depending on the number of weeks they actually work in the year. I think that's about it, hopefully.
Okay, fabulous. Anything you would add to that, Simon? What I'm going to do, I've just pulled together the holiday pay consultation piece, which I'll drop into the chat. If you saw me clicking away, that's what I'm doing. I'm just going to quickly bung it into chat. But if there's anything you would add to that?
Yeah, sure. So there are a couple of problems that appear with and it is a consultation. So what they're asking for is opinion and response. And there are a couple of problems with it that are just to think of. So one is the intention of actually moving to, as Richard said, a 52-week average. But that would include all weeks, whether you were paid, worked or not, to find the earnings, and then you've got this entitlement. The challenge with the 1207% method is that its proposal is on elements of hours. So there is an element of what do you do with pay and the averaging there, which is predominantly one of the challenges. So if that's a 52-week average, maybe that's good, but there is an element of it's looking at hours and not pay, because many people have actually been doing a 1207 of pay, not time. Equally, what time does come? So it's worth looking at and giving opinion, and especially the other angle is, of course, the people that devise this sort of legislation are monthly salaried people who don't get extra hours and don't work 0 hours contracts. And so they don't really know a lot about what happens in the real world. Am I allowed to say that sort of thing? But sometimes there's an element of design at civil service level fits civil service pay. Does it fit UK PLC is just a little bit of consideration. So it's worth actually looking at the consultation and examples. I don't think it's necessarily giving us the answer. I think it's giving us an answer to respond to, and then they'll consider the responses and see where it goes. But the other angle is just a reminder that the current law is the current law. So nothing has changed yet. Everyone's entitled to 5.6 weeks at the 52-week average, excluding 0 weeks.
Super. Well, let's lead into some of these questions then. Emma says, I think the main issue with holiday pay is interpretation. If we knew exactly what the legislation wanted us to do, we would all be a lot happier. Evelyn says, if someone's SSP has finished, but the employee is still off, do they still accrue holiday pay?
Yes.
Yeah.
The answer, they do, because they're still employed. Would they, under this proposed method? Potentially no, but under the current law, they do.
Don't go there, Simon.
I've got
so as Simon said, you are accruing a minimum of 20 days a year. The only caveat with the sickness is it's got to be used within the next 18 months from the end of the holiday year, basically.
Yeah, there's a time limit on it.
So someone says,
it isn't the use it or lose it time limit, it's a statutory time limit.
We're going to take it back to that 12.07% that we know and love so well. If you use 12.07% of hours worked for entitlement, not pay, would this give the wrong figure overall? So, as an example, if someone is hourly paid and you calculate the number of hours of entitlement, then when a claim is made, you do the correct average pay calc for the hours claimed.
Yeah, but they're totally different things.
Possibly.
And this is where the confusion is going to happen. You're going to be using one thing to work out the entitlement, and you're going to be using a totally different thing to work out the pay. And that's
exactly.
Right. And the joy is, if you read the consultation at the start, it talks about making it simpler, which is my favourite line of all time. So there we go.
Well, except when you, get into the consultation, and then it's wanting you to look at the average for the prior year. So and then it's kind of, the consultation proposals, some of them actually might be more complex than maybe it sounds. But that's why I think it's worth reading. But in answer to that question, Nick, no, it doesn't achieve the current law. But if the law is changed, it might achieve the new law.
Okay. Often we get questions about holiday pay and national minimum wage. We also talk about the real living wage. So I've got a question here that says, whilst we pay the real living wage from April 2023, we will need to remove some employees from the pension salary sacrifice as they will fall below the living wage. This will be in writing and a change of their contract. So we need to sorry, this is Bobby Arcs. It's just one thing. This will be in writing and a change of their contract. So do we need to provide a minimum of 30 days notice? Apologies for that.
Oh, that might be a good one for you, Andy, isn't it?
Yeah, I think the salary sacrifice, and whether you can take salary sacrifice or you have to go to normal pension contributions, that's linked to national minimum wage. The real living wage, I thought, was much higher than the national minimum wage. So in theory, you can still do salary sacrifice from a legislative national minimum wage perspective. So that's a thought you need to consider. In terms of the actual agreement you've got with your employees for a salary sacrifice to be taken, then that's, what have you written in there? You need to get employment law advice on that, because it's not a pension thing, it's actual contract law between you and the individual as to what you've agreed. So when you can go in and out of normal contributions or salary sacrifice, you could be, because you could end up going back and forth every month, if you're not careful in terms of what you're paying and what you're not paying. So my first thought is real living wage above national minimum wage. You don't need to worry about salary sacrifice until you consider you might be breaching national minimum wage. I don't know what else. Any other thoughts anyone else has got?
Well, sometimes, as Andy's implying, the general implication, of course, is that living wage is above the national set rates. However, as Andy's also saying, you can sacrifice living wage. You wouldn't breach the living wage foundation by doing sacrifice or even deductions for the benefit of the employer, because it doesn't follow national minimum wage law. So you can actually be a living wage employer, have an audit and find you've breached national minimum wage because you've forgotten to take account of all these other things, such as salary sacrifice for the electric vehicle and childcare and your pensions. And also, by the way, they've taken a £50 subscription for the staff canteen. There's all those sorts of things that might be going on, which wouldn't breach living wage, but they would breach national living wage and national minimum wage. So it's a complex area. If there's an element of, I don't know if that related to holiday particularly, but
no, I don't think it did. No, I don't think it did. I've
yes.
got one here that does. I'll come to you, Lou, just to pull you into this, but always pass it on if I've gone to the wrong individual. But it says our 0 hours staff don't take any actual holiday, as some of them may not have worked for months. How do we deal with this? Do we just pay out at the end of the holiday year?
I think may well Simon laugh. I feel that it depends on the contract and how the contract is written, on how it's dealt with, because people who work are still entitled to holidays. I think, Simon, do you agree that it would be a contractual agreement between the employer and the employee at what point that would be paid out? Now, when I worked in local government, how they dealt with that was that they looked at it and they reviewed what should have been paid or what was due, and it might have been paid every quarter. But there are some employers I know as a bureau that if a payment's made and it's in part of the company policy that's been signed up and agreed, it can be paid on a monthly basis.
Yeah. So I think Lou's correct to an extent of the contract is key, but also is key is having leave. So that elements of, you could have someone that works every day of the year and accrues up all this holiday. Can you pay them cash? And I think the answer within the law would be no. But if you've got periods where they haven't worked, there's no reason why you can't say that's when you're on holiday. So does that kind of balance come into play? So you don't have to be assigned to do work to take holiday. You just have to not work, is the general principle. So if you're on a 0 hours contract and you're not paid for 3 weeks because you didn't do any work, the employer could say, here's your holiday, but your leave is in those 3 weeks you didn't work, whether that's half an hour, or whatever. But if they work throughout, where's the leave taken? You see where I'm coming from? So it's an element of being very careful.
Which might be a process. A different individuals followed up. They've obviously got more 0 hour employees, so have been pulled into the conversation here. But it says if 0 hour employees don't ask for holiday, we allocate holidays to them using the double notice rule.
Yeah, exactly. And the double notice rule that's being talked about there is an employer can require people to take holiday. Yes, they can say you're going to be on holiday on this date, and the requirement is to give twice the notice of the length of the leave. So that's, I think, what they mean by the double notice. So yes, so if they weren't assigned to work next week and they've got a day's holiday, you could say today, or by the way, next Wednesday you're on holiday and we'll pay you for the day because you've given more than 2 days notice.
Just to add, sorry, just with 0 hours workers, I think often, it's a good one to capitalise on why the contract is used, because often it's used for peaks and troughs. So if in your business you know when it's quiet and you're not going to be using those workers, in previous roles we've paid holiday on a regular basis, but it's always where we know those workers won't be in, so effectively they're taking the leave, but it works in terms of in line with the business requirements essentially. So it's designing the contract in that way as well is helpful. It gives payroll certainty.
And there's a little concession in relation to 0 hours contracts as well, and that's if you haven't paid them for 4 weeks, the law permits you to pay them as if they've left. Doesn't mean they have left. It just means you can do them as a termination holiday payment. You can retain them, but that stops all your accrual basis, etc., from occurring. They can still be on your books, but in effect, you've paid all the holiday up to date.
Nice. Now we're getting a few salary sacrifice questions. For those that put the salary sacrifice questions into the box, thank you. I'm going to ask those when we open the salary sacrifice slide. So bear with us when we open that section. I will come to those questions. A couple more on holiday pay though, and I'll stay with you, Samantha, if I can for a moment. If we want to operate a holiday purchase scheme, should the deductions only be from the gross side, or can we operate a net deduction if we have employees who will breach national minimum wage?
Well, for national minimum wage, you absolutely shouldn't be implementing any salary sacrifice scheme where it would take them below that level. As an option for a net deduction, I wouldn't think that would be effective either, but it's my instinct. I'm sure somebody else would be able to put more around that. I can see
Simon's in agreement with you because he's shaking his head at the same time. So
yeah, it doesn't feel right. It feels like that would still be classed as for the benefit of the employer, because ultimately that's where that pay would sit.
Yeah, net deduction makes no difference. If you look at the Iceland case that had so much gravity a couple of years ago, because the company it was going to was linked to Iceland in the end, so it was an asset. That was a net deduction. It makes no difference that it's gross or net.
Yeah.
But as a scheme, where you can. Sorry, Simon. I was just going to say where you can implement that salary exchange. I think it's a win-win, because it can be a saving for the employer, and from a benefits perspective, everybody knows what the market's like out there at the moment. And it is quite simple to operate off on an annual basis, and the systems out there that can support it as well.
Anything anyone would like to add to that? Are we good? We're covered?
Well, the only additional comment that Nick was, it's a question of who are they paying if you deduct it? Who's getting that money? And as Sam shown, and I think Richard as well, for a holiday scheme, they're paying the employer. Well, payments to the employer reduce pay for national minimum wage purposes, so it absolutely make no difference. And that applies to others as well. So if you've got childcare vouchers, who are they paying? The employee is not buying childcare vouchers off the childcare company. The employer is. The payment is to the employer. Yeah, because there is no tax and NI relief for an employee purchase of childcare. So maybe we'll cover some aspects of that with salary sacrifice. But if it was, they've got a £10 union fee, you're not paying the employer, you're paying the union. That's okay, because it's not for the benefit of the employer. That's for the benefit of the employee. So there's an element of thinking, who, if we move something from salary sacrifice to a deduction, is that paying? And in the case of a holiday scheme here, it would be paying the employer. So it actually would have no effect, and you'd still be in breach of national minimum wage law.
Okay, a couple of comments on there as well. Kerry has said if you operate purchase leave, the person is working less hours across the year. Doesn't that mean the hourly rate for the work time still sits above national minimum wage?
Possibly, yeah.
Yeah, when the holiday's taken, but not necessarily when the deduction is made. Because remember, you calculate national minimum wage against pay reference periods, not the year. So, good try. No. Next.
Sure. I've got here, net for purchasing isn't an option. We have just launched the scheme. It's still opening you up not to be in compliance with national wage. It's more of an observation. Thank you, Jessica. Brought annual and sold annual leave is offered in our business that we have set up as part of the employee's gross and taxable pay. Thank you for that, Brenda. So there is a question here that comes in. Actually, we've seen there's 2 or 3 questions that run along a similar theme. So I'll probably try and, if I can, come up with a way of asking this in one way that kind of makes sense. Where do you find the guidance for how to calculate a variable hours for agency worker holiday entitlement? Not pay, very clear on this, but the entitlement. On the government calculator, it purely just says 5.6 weeks. No actual guidance is provided in terms of what it means in reality or how to calculate as you go along. You don't just do holidays at the end of the year. And the reason I highlight this is a question, I've had another one that came in that said, what about for people who work different weeks every week and are paid different values each time they take leave? I know how to calculate holiday pay, but I do not know how to work out how to do the accrual, given that their entitlement is usually accrued based on time worked.
Oh, okay.
Well, in accordance with the law, it isn't. And I think that's the critical factor here. So accrual of entitlement is nothing to do with work. It's all to do presently under current law, regulation 13, 13A, 14, 15, 16, on how long you've been an employee. So you accrue entitlement from the first day of employment. Whether they give you hours or not, your entitlement is accruing. An accrual only actually applies to the first year of employment as well. So it doesn't apply to subsequent years. Your entitlement to subsequent years is 5.6 weeks as a statutory minimum. And the basis in the first year, if you're employed to the end, is 1/12 of 5.6 weeks for every month or part month you're employed. Okay, it comes under, I think, I'm saying this from memory, I think it's regulation 15. And if you leave, it then goes on a basis of 5.6 weeks, divided by, in effect, 365 times the number of days from the first day you're employed to the day your employment terminates. Now, with the starter pay, it's rounded. It's required to be rounded in days, so to half day or full day, then you apply the hours that you would normally get in a day, which could be an average or a fixed basis. With leaver, it's rounded to tenths, and you can never round down. We've had a couple of requests to actually chop down to the whole number. You can't. You can chop up. You can't chop down. That's unlawful. You've got to round it up. You can round it up to half day though. So the basis, whether they work 1 hour or 100 hours, if they work for 1 month, it's 1/12 of 5.6 weeks leave. That's the entitlement. If you employed them on the 31st of the month, say if you employ them on the 30th of November, 30th of November, and the holiday year runs from January to February, they have 2 months, so 2/12 of 5.6 weeks, according to regulation 15. So the Bayes calculator operates in weeks because that's the outcome of pay. Now you know whether you've paid it because number of weeks times the average will equal the amount of money. Is that what you've paid? Hopefully that helps. It may sound a bit obtuse on some of that process. The problem is quite often we're trying to base it on a basis that the law doesn't cover. That doesn't mean you can do what you like. It means whatever you do has to equal what the law requires, which is 5.6 weeks. And that's why the Bayes calculator always does it in weeks.
Just to clarify here, that the individuals come back and say, what is a week? What if someone just wants to take 3 hours off? There needs to be some method of division. Does that make sense?
Exactly. So what does that 3 hours represent in the week they're taking the leave? So some decision needs to be made of what that 3 hours means. Now, if they only work 10 hours normally and they've got 3 hours leave, so they're only working 7, then you could say that's 3/10 of a week. In which case you'd reduce their entitlement by 3/10 of a week and you'd pay them 3/10 of the average.
I guess the complication comes in when it's variable. When you do 10 hours 1 week, 1 hour the next, 6 hours the next.
That has no implication at all, no. Nick. Doesn't count. The variable nature is in the average weekly earnings calculation. The leave is what's that week.
Yeah, there is no
Would
normal.
You agree with that, Richard?
That's the point.
Yeah.
Well, there so is. No, in a week, you've got a week. What would the working week be? What proportion did they take as leave? The history doesn't matter.
So another question here, and I'll come to you for this one, Richard. Am I correct in assuming that the 12.07% method, I love this, is still in use and the 52-week average is still in consultation?
No.
That's what I thought you would say.
Not. So here's the score. The 12.07 never truly existed. The trouble with the 12.07%, and at the point of the Leslie Brazell case, was that, for instance, it was recommended as a tool by ACAS, and it was tertiarily included in certain government forms. By rights, it hasn't been 12.07%. It was 12 weeks average, and then obviously from 2017 it became 52 weeks average. So it was a method that was recommended outside of the legislation. The trouble was it should never really have been recommended. And we've seen through the Brazell case where there can be pitfalls to it. So if you can go on Gov and find me 12.07% in anything other than this new consultation, Simon will take you out to dinner. I can
mean,
say
it
that.
used to be documented in all the ACAS information and all the stuff that we used to work as. I mean, I think that was the problem. It was other governing bodies started to use it and put it in their documentation.
Magically, what happened with the Brazil case is it vanished as if by magic.
2019.
Yeah,
yes.
Amazing.
Yes. So 2019 ACAS dropped it. Sorry, go on, Lou.
No, I think so. To go back to the poll and the questions that we asked, this is why we need to have clarification, and this is why we need to take part in the consultation. Because as Simon and Richard have both alluded at the very start, whenever you go on to social media groups, in particular Facebook, we have people sharing what they do, but with no facts to back it up. And then other businesses, organisations and teams are picking that up. So the 12.07 hasn't been around for a long time, but it's still there because we're going back to the very start of the conversations when all this kicked off 6, 7, 8 years ago. So this conversation opens up to see that it's not just one or two people. We're talking about possibly hundreds of people using this figure, and we shouldn't be. But we should also get online and take the 10 or 15 minutes to do the consultation, because for so long we've worked in the dark. I mean, not all of us have minds like Simon and Richard, no offence, who teach this and who know this. Every day, whenever you're in payroll, you're dealing with employees and other day-to-day payroll without having this added complication of holiday pay. I'll get off my soapbox, but I do feel strongly because,
but let's be honest, this is only one portion of where employers have issues at the moment. We could go into the case law. So let's say Gary Locke, British Airways, Dudley Metropolitan Council, and I'll carry on and carry on. There's all of that too, where it isn't legislation, and to a degree other than probably Gary Locke, it isn't guidance either, but we have to consider that too. So I think there is so many tangibles, so much legacy, and so many, I guess, particular opinions that you could actually take the whole holiday pay subject and say, what we really need is almost like a list. This is genuinely what you've now got to do. This is how you calculate it. This is what you've got to include, and this is what you shouldn't. And that's what we need. And I'm going to be Prime Minister one day, and I'll make sure it happens.
Just to make it easier, if people did want to, just by following on from Lou's comment, really, if people do want to get involved in this, I've just put a link into the chat box. So any affected party can take part in the consultation, including but not limited to employees, employers, and unions, as well as legal representatives. To sponsor the consultation, I've put the link in the chat box. If you are passionate, as Richard is, about this, then you can click through that link and make your own voices heard. And it sounds, from what Lou said, that it's worthwhile doing. So we can try and get some. I mean, they devolved the Office for Tax Simplification. Maybe they should bring it back in there. It'd be a little bit easier, but I think that went with Liz Truss.
Office of Holiday Simplification.
Yeah, absolutely right. Well, there's 2 more questions here. We're getting as many questions on salary sacrifice. We are going to need to shift the conversation forward. I'm going to just cover these last 2 questions, and then we'll open up the slides on salary sacrifice for those who've been waiting very patiently with your questions. I will get to those shortly. So the last 2 here on holiday pay. By the way, if you do have more questions on holiday pay, you can continue to put them in the chat box. I will try and get to them, but I'm going to move to the salary sacrifice question next, and we'll come back to some further questions a little bit later on. So last couple here. Based on this recent consultation, a colleague of mine has heard that contracts ideally should show employee holiday entitlement in weeks, not days. Is this correct?
Do you want me to cover that?
So you're nodding. Yeah.
Yes, where time worked is variable, that's the Bayes recommended method, is to operate in weeks.
Super.
Yes.
And last but not least, do you know the regulation that allows for the payment of holiday as though a leaver for those who have not worked for the last 4 weeks, but not processed as a leaver? Thanks. Does that make sense?
For the 4 weeks on a 0 hours, no pay. We can look that up and provide that, but that is a requirement. So you'll find that in the irregular pay guidance issued by Bayes, but I can't remember off the top of my head the specific legislative basis for that. But it is mentioned in the irregular hours and holiday pay guidance issued by BAYS that you can treat someone not paid for 4 weeks as a leaver.
Yeah, because obviously determination is Reg 16, and I can't think it's in there. I know it's really sad.
It's probably in the Employment Rights Act.
Yeah,
or similar. And the other aspect, which is still quite common, Nick, and we do still see a lot, is rolled up holiday, and that's where we've got to be careful. But rolled up holiday was outlawed in 2009. So if I've got that right from memory, so the 52% averaging applies for Great Britain. So the 52 over 104 weeks, excluding 0 weeks, applies to Great Britain. So that's England, Wales, and Scotland only. It came in April 2020. Lou is kind of our Northern Ireland representative. If you're employed under a Northern Ireland contract, Northern Ireland is devolved law, still retains the 12-week, excluding 0 pay weeks, averaging method requirement.
Yeah.
Right. Well, let's move. I say keep putting the holiday questions in the chat box. But let's move the slide on. We've got lots of questions about other areas of the conversation we're bringing to you today, particularly around salary sacrifice. So the new slide here is we're going to talk about how these schemes work, the wellness balance, EV cars. Lots of questions on social media, in particular about EV cars and insurance implications in particular, and of course national living wage. So that what I mentioned here as well, there is a link you'll see at the bottom. That there is a premium webinar. This is a paid-for webinar. But for those that have questions we don't cover today that really want to get into the detail on this, Simon is hosting a premium webinar on salary sacrifice on February 27th. So you can sign up for that. It is a paid for webinar. You're going to get really into the detail here for the whole session rather than part of it as we are doing today. So if we don't get to all your questions, you're still none the wiser. That's the one to sign up for, and you'll have Simon all to yourself to talk about salary sacrifice. But aside from that, the link is there, so you click through, and I'll try and put it in the chat as well. Let's talk about how these schemes work. Who would like to kick off the conversation?
I think from a bureau perspective, just to go back to the very basics before we go into the detail, it's important to remember that a salary sacrifice arrangement is an agreement to reduce an employee's entitlement to cash pay, usually in return for a non-cash benefit. And as an employer, you can set up a salary sacrifice arrangement by changing the terms and conditions of an employee's employment contract. And I think that's really important to remember, because so many times I've had employers and businesses come and they haven't actually given that information to the employee. They don't understand it, and they try to set up a payroll within a bureau that doesn't take into consideration the reduced salary and the impact that it will have.
I agree with you.
Just to say, what, and if anyone knows this, and this isn't the detail, but I've never understood it. Maybe it's because I'm outside looking in. Why is it called salary sacrifice and not salary exchange? Sacrifice, I think, just gives all the wrong idea of what it's all about. When for me, as I understand it, it should be called the salary exchange. Or am I just missing something here? So I think a lot of confusion comes around about what it's called.
The original conversation was that you are sacrificing an element of your cash in return for a benefit. That was the original statement that was made way back when this all started, hence the name pretty much stuck. But yes, you are exchanging cash for benefit, so it means the same thing. It's just, I think it's just the formality of what it was originally called way back in 1734.
If I become Prime Minister, that's one of my changes I'll be making. So sorry, I didn't mean to cut you off there, as a non-payroll professional in that sense. I was keen to understand. I'll come back to you.
So we've got 2 Prime Ministers in waiting on this call. Is that what we're saying now?
Nick's going to be
we
my
have that as a poll, could we? We could. Who do you want as Prime Minister that's on the panel? Yeah.
I'm not sure I want to see the results. Sorry, Samantha, I cut you off. You're going to bring some more.
It was just really to add to what Lou was saying. I think what tends to happen with salary sacrifice is someone will go in and they'll go, right, we're going to set up a salary sacrifice scheme and we're going to change the contracts or amend the contracts and do all of this. And then exactly like Lou says, then everything then gets forgotten. It's almost like a project that was a point in time, and going forward, nobody quite remembers that it needs to continue, and it's got to be taken into consideration from every pay period going forward. And that's the big challenge. So how does the scheme work? There are variations to your contract, as we've already said. But the schemes, in order to remain effective and stay effective, it's about keeping those principles alive, and that is so important with salary sacrifice. And I think it's a big risk area out there for businesses where those principles become lost, whether it because of attrition or lack of knowledge. But it's so essential that they don't.
Great. And Simon, I wonder if you can just bring up, if you can just run us through these bullet points, because we've already had 7 questions come in on this, so that's going to keep us busy again. So if we can just work through these points in turn, and then we'll jump into those questions.
Yeah,
and,
sure. So how do these schemes work? Lou's been very good. I think she's exactly right, and it's a principle that quite often we get lost in as professionals, even because it is a strange concept. So I guess if you ask the common man, can I buy a childcare voucher and get tax relief? They might think they can, but you can't. So you might think if you're part of a cycle scheme, you can buy a bike and get it tax and NI free. You can't. It's impossible. They might think you can get an electric vehicle and get it tax and NI free. You can't. So we play a little bit of trickery here. So how do these schemes work? And there's an element of, well, I'll tell you what, this is between employer and employer. I'll pat your back if you pat my back. So you actually agree to take a pay cut, so you never earn the money. All right. And in return, you're receiving a free benefit in kind. Now, the perception is I've paid for it as an individual. You've absolutely paid nothing. You've taken a pay cut and you're receiving a free benefit. So then the tax position moves to the benefit. And if an employer gives me free a childcare voucher, do I have a tax and NI liability on that free benefit? And the answer is up to £55 a week. No, it's tax and NI free. But if I buy £55, I have to pay it after I've paid my tax and NI. So we can see the difference. So the one is taking a pay cut up front, and they're not retrospective. You can't really make a retrospective agreement. And I think, as Richard said, the earlier salary sacrifice arrangements were generally related to bonuses. So what people would say is, instead of giving me my, I don't know, £10,000 bonus this year, can you pay it into my pension scheme, because I'm going to retire in a few years' time? That way, there was no tax, no national insurance taken off the bonus, because you never had a bonus. All you had was a £10,000, or maybe even a £10,138 amount, because the employer saved on national insurance, paid into your pension scheme as an employer pension contribution. And that's where they really originate from, is on pensions bonus sacrifice. Then we have a principle that applies. So just think about it. I'm going to give next week's presentation too early. I've got to be careful, haven't I? Sign up for it.
People won't
sign up. So I've just put the link in the chat for everybody so they can sign up.
Sure. Yeah, there is a principle called Heaton v. Bell, and I'm not going to go into the principle here, but sometimes you'll talk about lifetime events or lifetime change, because if you can just change the contract every other week, it doesn't work. Could that apply to living wage switch off? Could actually changing someone from a salary sacrifice to an employee purchase actually help reduce? The challenge with the national living wage is it's going up 9% or whatever it is in April. So millions more people will be close to the national living wage. And if they're part of these flexible benefits, salary sacrifice arrangements, you may actually find they breach national minimum wage law. All right. But I think the wellness balance is a comment of, and I'm going all over the place here, Nick, but the wellness balance is a comment of actually they're a great vehicle for those that have earnings sufficient to actually bring benefits into our working life, our family, etc., whether that's medical insurance or dental cover, if you can find a dentist. So you might need the dental cover to get ourselves fit by riding bicycles, getting a new telly, all these sorts of things. Electric vehicle, because buying a Tesla without it, you've got to do it after you've paid your tax and NI. So they're really expensive. If you do it through an EV scheme, you could probably get, I don't know, if you're a high earner, 42 or % off because you don't pay tax and national insurance on that. These are all elements for why they've become popular over the years. But we also have something called OPRA, so that's optional remuneration law, which actually stops it for a lot of things. So I think it's important to understand what these salary sacrifice arrangements are, what they really are. The employee is absolutely buying nothing. Unfortunately, as part of the salary sacrifice, flexible benefit schemes, they often talk about benefit purchase, but you're not actually buying benefits at all. You're allocating this pocket of employer benefit to various different things. Does that help? Right, confused?
Yeah, because I think this is the key, because there is this overlying function that if you are sacrificing, you're sacrificing your money towards an employer cost, not an employee cost. All salary sacrifices are paid for by the employer. So whether it's a car, whether it's a private healthcare, whether it's a pension, you're sacrificing the employer contribution. Hence, as Simon quite rightly said, at no point are you buying anything or paying for anything. And that's quite key. Great,
good clarification. Well, listen, we know this is an audience show and we've got a lot of questions here. I'm going to try and run through them. And they're going to bring you into the conversation, which you'll be pleased to hear. There we go. Our workplace pension scheme operates via salary sacrifice. When we auto-enroll new joiners, we are potentially doing so without getting their prior agreement to sacrifice their salary. Do the auto-enrollment requirements supersede this, or should we actually be running a non-salary sacrifice option?
To put someone into an automatic enrolment scheme, you cannot have any barriers. So you cannot get the individual to sign up to salary sacrifice in advance. It should all be built into the employment contract, etc., so that when you come to enroll someone, they're going to go into the pension scheme and they're going to be having a salary sacrifice agreement already set up ready for them, so that they are giving up part of their salary in exchange for an additional employer contribution. So you can have salary sacrifice agreements, you just got to get all that in place before they join the scheme. So you do need to, it's very common. So there's stuff out there and legal people can advise on how to build it all into your contract of employment. And it can be, it is, you are just saying, I'm going, my pay will be reduced by the employee amount. So the 5%, for instance, you just got to get it worded properly and it then becomes an employer contribution. But you need to just go and get your legal advice to get all your contracts nicely in place. So it's all done neat and tidy.
Well, that dovetails very nicely into another question we've had from a different audience participator here, which says, do we need to issue a new contract every time someone enters or changes their salary sacrifice? If not, then what paperwork do we need to issue?
Well, if it was me, I'd have my salary sacrifice agreement in such a way that any changes were all built in. But it's flexible benefit schemes, for instance, if you've got one of those, then you're going to have all those agreements in place as part of flex ben sign up that you are doing. Obviously, just one additional point on the pensions front, don't forget you need to make sure the pension provider is happy for salary sacrifice to be the route for that, because they might have built into the scheme rules it's an employee contribution and an employer contribution, not employer only, which is what a salary sacrifice scheme would be. So make sure that your pension people are aware of what's going on in advance of you putting a salary sacrifice agreement in place. But in terms of the other side of things, I'll leave it with my fellow panelists to comment.
Yeah, principally you would have a contract which incorporates change. So the usual favourite being life change, and obviously we saw a huge amount of that during COVID because that was considered a life change. You may have ladies, for instance, who go on maternity, or men who go on to parental pay. All of these things are considered life change and therefore would affect or could affect on the employee's choice the status of the sacrifice. So rather than having to recontract every time somebody changes something, it makes far more sense, you would say, to have all of that caveat and all of that variation built into the original agreement.
Super. And while I've got you, Andy,
so often, sorry,
so go on,
I'm just
Simon.
thinking often, Nick, it would be part of the application of the benefit of the scheme. So the variation is not usually issue a new contract, it's just an addendum, isn't it? So you've got the contract change within the application. So I imagine, as Andy's implying on the pensions there, the pension salary sacrifice would be part of the original auto enrolment information shared with the employee.
Okay. Another question here. I think what we see more and more often is that employers apply a salary sacrifice deduction, but payroll software doesn't seem to calculate overtime, unpaid leave, etc., based on salary minus salary sacrifice. The systems, you're on the Irene committee, Simon. You might be a good person to comment on that.
Yeah. Okay. Yeah, sure. Well, lots of employers actually place a protection in because you're right. Strictly speaking, the earnings is reduced. So quite often, employer will operate what they call a notional earnings amount, which would be the part what it would have been if the sacrifice wasn't in place. That way, employees aren't disadvantaged on their overtime rates or other benefit calculation values, such as an employer pension contribution, for example, because in theory, qualifying earnings is dropped, but there may be an element of, well, that's advantage just the employer. So often, other associated items are based on a notional value, which is the original pre-sacrifice amount. That doesn't make it the amount they're actually being paid. They're actually paid after the sacrifice, but it is used as a basis to keep things equitable on linked items. So it's quite common actually for notional values to be applied.
But it must also be remembered that, I was going to say, Nick, but just really on the back of that, which is really, really important, that can only be on certain areas and items. When we look at things like maternity, for instance, it's nickable pay. And because you sacrificed, you reduce your nickable pay, and therefore when you're calculating the average earnings, you're calculating sub or after sacrifice. So even with the notional to support and I guess maintain areas like overtime, there are always areas that aren't, because always the winner is student loans. If you can sacrifice half your pay, your student loan is only calculated to the threshold of your nickable pay, and therefore by having lots of salary sacrifice, it could actually reduce the effect of your student loan. So there's winners and losers, absolutely, when it comes to them on that.
Just to follow on as well, the same individual that posted the original comment just says, does that need to be explicit? Question mark. I think it was referring to your initial answer, Simon.
Well, no, because that becomes an employer not explicit to the salary sacrifice arrangement or satisfying HMRC. That's more a contractual matter. So it's variable depending on the employer's use, really. So hopefully that helps. I think it's good to make it explicit, but there isn't a set rule that is applied for everyone. You choose as an employer what you want to do.
Well, we knew there'd probably be a question around cars. We've got one that's come in here. It says, we have recently set up a sacrifice scheme for cars. The way it is set up is that the employee is exchanging a portion of salary for the car. The issue I have is trying to establish whether it is a company car or not. On the other hand, the employee is still receiving a car allowance. Between HR and our finance team, there seems to be lots of discussion, but no real clear guidance. I've been advised that it is a P11D item. Can you give some guidance on this, please? Oh, and I forgot to mention at the end of the scheme, the employee owns the car. So I know Rich is gonna. I'll come to you for this one actually, Richard, because you commented on this. So what's your immediate thought, judging on that reaction? Does the employee own the car?
So here's the question: who's paying the lease? Let's just start there, shall we? During the period of lease, it's the employer who is paying the lease on the EV car, and as such, yes, it's a salary sacrifice. Yes, it's a legacy because it's under 75 grams per kilometre. So all of the NI savings are applicable to the employee and the employer. But during the period of the lease time, it's an employer car, therefore it's a company car. So where we see you can actually see even more value in these EV lease schemes is because it's a company lease. It could well and more than likely would include maintenance, car insurance, and we're going to talk about that a little bit later on, I suggest, and all the other applicables that you would get with a company car. On those grounds, therefore, it's a P11D item because it's a company car. So yes, you're paying the lease via the salary sacrifice. That isn't considered for the P11D, but the good old retail value of the car the day before it's received is. Currently that sits at 2%, and that would be a P46 car item, and it will be a P11D car item. Now, I've never been asked the last bit before, which is then the employee owns the car. So I'm guessing that then becomes a transfer of asset. Am I right,
Yeah.
Simon? Yeah.
I'd absolutely agree. So then that's a taxable benefit when the asset is transferred.
Although presumably, I don't know, it depends on the size of the company, the company will write off the proportion of their assets over the course of time, right? So if they were writing off the value by 25% a year over 4 years, the employee could transfer a pound or something like that.
You could, but it doesn't kind of work that way. And well, you'll know you kind of run a business, Nick. So for a company's house, I can have a 25% asset drawdown. For HMRC, so a quarter, and it's written off in 4 years. For HMRC corporation tax, it reduces by 18% infinitum until it gets to a point where it's so small. So although I may have written it out from my corporation, from my company's house profit level over 4 years, for a corporation tax, it could take 30 years. But in relation to this, you could say on my company asset, this actually has no value, but it still has a taxable value. So that will go on market, not company's value. So you then, well, and which might be problematical. So if some of you have changed your car more recently, you may have found, for example, I often buy near new cars.
Yeah, they've gone up.
My exchange for a near new car, I've had more money for the last near new car I bought 3 years ago. So I've actually gained. So the asset's gone up in price, which seems
particularly true for EV cars, where the waiting list can be significant.
Absolutely.
You know, actually you can find it's cheaper to buy new.
The only positive is in a lot of cases it's not the retail, but it's the value, or it's the retail value at point of transfer. And it's the same with everything. There was the whole thing with the office furniture. When people are being allowed to keep it when they go back to the office, it's not the retail value of the computer, it's the point of transfer. But as Simon said, the point of transfer figure is going up, and on certain things it's now higher than what it possibly was when they got it. So it's
it's not quite like a bike where you think after 4 years it's worth 20 quid, just pay the 20 quid. For an EV car, you may find it's a lot more. And then you know 20% of that asset in tax, will be taxable and subject to Class 1A.
Conscious of time, I'm going to come to Andy for one final question here on salary sacrifice for the moment. There's a couple of other questions as well, which I'll run through in a moment we go through polls too. So back to you, Andy. How do you do the salary sacrifice calculation when the employee wants to have their NI savings added back to their pension and not added to their net pay?
The individual's NI saving, then really that's the joys of speaking to your employer, your payroll department, and speaking to your software provider and see if there's a way of doing those calculations in the payroll system. And if that can't be done, then the individual could just say to payroll, I'd like to not just have 5% salary sacrifice. I'd like to have 5% plus 12% of 5%, so 5.6% or whatever, as my salary sacrifice deduction, and in exchanging that for the employer contribution. So yes, that's, I mean, sometimes the employer also forgoes the whole or part of their employer NI saving as well, and some payroll systems do have that built in as tick box type, do you want to do this or not, setup. So yeah, have a chat with payroll, and payroll no doubt have a chat with the software provider.
Sure.
Andy will know that I wrote an article probably back in the early days of COVID, because furlough and salary sacrifice was kind of one of the challenges there, that actually kind of gives the formula, but that you can operate.
Of course, for those that are interested in finding out more, there is obviously that webinar that Simon's running. It's a premium webinar, so it's a paid for webinar, but have a look at that link if you want to find out more. I'm going to move the conversation on.
Can I just say one thing, Nick? Just on SMP and salary sacrifice, we do need to talk about that in case people are not aware. If you're doing salary sacrifice and the person's only on SMP, that's all they're getting paid, then you cannot recover salary sacrifice from SMP. Remember, they've exchanged their salary for an employer contribution. Employer contributions are payable by the employer during the maternity pay period while they're getting SMP, based on the pay the individual would have had they not been on maternity leave. So the individual will pay based on what they are receiving in terms of pensionable pay, but if they're doing salary sacrifice, then the individual is not paying anything. The employer is paying the whole lot based on the pay they would have had they not been on maternity leave. So, and you cannot recover that salary sacrifice amount from SMP. If there's other occupational maternity pay, or maybe some other payments going through and the salary sacrifice agreement between the employee and employer allows it, then that salary sacrifice amount could be recovered from those additional payments, but it cannot be covered from SMP. So bear that in mind.
Sure, and that extends, Nick, to these other items. So if they get £55 worth of childcare, they're entitled to £55 worth of childcare through their maternity leave. They're entitled to the continued use of the EV car through their maternity leave, 52 weeks. And potentially, if you only pay them SMP, they don't have to pay a penny. Well, same with the bike.
Yeah. It's very good to have very good rules in your sacrifice scheme.
I'm going to move the conversation on, It's just so we get through the other subjects, because I know we could be here for a while. There's still questions coming in. I'm going to open the next poll just to close down the salary sacrifice section for now. Poll is to get you all involved. 145 of you here. How will national minimum wage affect your salary sacrifice scheme? Option 1, we don't offer it. Option 2, it will be expanded. Option 3, we are looking at EV cars. Now, interestingly on that, I did get an update as well on the car question. You'll be interested to hear here, Simon and Richard. It says let's have a look here. So the employee actually did end up with a Tesla. So they'll be interested to know how that worked out. So that'd be quite interesting. Anyway, and I thought you'd laugh. While we're there, a couple of questions have come in that don't necessarily sit in the salary sacrifice section, so I thought we could ask those while we're waiting for the poll results to come in. One of those comes in from Tamar. Hi, is union subscription deducted from gross before tax?
No.
No. Great, that's fine.
So you take it after tax and after national insurance, union subscription.
Sure. Okay, we have been paying someone company sick pay, then PHI, but PHI has now expired as the employee has reached state retirement age. Can we start paying her SSP now, as we have never paid SSP? She's been off since October 2020.
I don't think that's true, Nick. I think if they've always been paying SSP, if not, they've been breaking the law. The reason being is sometimes we think when someone goes on sick, we're paying them 100% occupational payment or whatever other payment. Therefore, we're not paid SSP. No, the payment is inclusive of SSP. It's not instead of. If they're entitled to SSP, they're entitled to SSP during those periods where you've paid them full pay and they've received it. So the 28-week rule will apply from the start of the commencement of sickness. So it isn't, oh, we'll pay occupational and then at the end of that we'll move it to SSP. They're already on SSP. It's
And
just it's inclusive in the other payments.
Is reaching state retirement age impactful at all?
Potentially so. I'll give Richard an opportunity to talk on that sort of thing.
Thank you. It's all on I guess it's all on the NI status, isn't it, of the individual?
It is. Yeah.
It's the only thing I can think
average
of.
earnings. Yeah.
Because there's been no applicable earnings, and if they've retired per se, then there's still no applicable earnings.
Yeah.
That's a good question, and I'm guessing rather than telling.
Yeah, so it may be one for a look at.
Yeah, it's a look up, that one. Perhaps
Okay.
Simon can talk about it in his salary sacrifice webinar. I don't know.
No, I'll do one on SSP.
Let's have a look at those poll results then, see if they come in.
Yeah.
For those listening on audio, we've got 22% have said we don't offer it. So that's how will national minimum wage affect your salary sacrifice scheme. 50% say will be expanded, and 28% say we are looking at EV cars. What are your thoughts on those results, Lou?
I mean, the fact that 50% say it will be expanded is good, because with the changes coming in as a payroll professional, or if you work at part of the HR or finance team, you have to know how your workforce will be impacted and what, if any, changes that you do have to make. So it would be good governance to do that. It's always good, sorry if I'm being cynical, that people don't offer it, because salary sacrifice fills you, well, maybe it's just me, fills you with so much dread, because you need to make sure that of what the policy is and what an employee's contract is. And remember, I don't actually work in a business, so I'm working in a bureau environment with 450 plus clients. So it's about understanding what their contracts are and what the employee has signed up for. And again, being as part of Evelyn Partners, I'm also very lucky that I have tax teams and benefit teams who are able to help me look at the likes of the cars and the impact that will have on employers and employees.
Well, let's move this on. I'm going to ask if we can, to move the slides on to. I'm going to go straight to enterprise zone relief. I'm going to put the devolved government section on pause just for a minute. I'm conscious of time. We've had a couple of questions emailed in to us prior to payroll question time taking place, and I'm really keen to make sure that those questions do get answered today due to the time and effort that's gone into writing in to us. So if we can go and move forward to enterprise zone relief, that'd be fantastic. We've got three things we're going to talk about here, which is premises and Freeport, growth zones, and green free ports in Scotland and Wales. And I'm going to start with the question this time, just because, as I said, this question has come in advance. So the question is this: an employer can claim NI relief if they have a business premises in a Freeport tax site. To claim relief, an employee must spend 60% of their working time in the Freeport tax site. The Government UK site provides maps of Freeport site areas, but they're really hard to read. Is there anywhere which gives site postcodes? We have two sites which might qualify in Teesside and the Solent, but have not committed as we're actually not sure. We would like to tackle that.
I'm not aware of anything other than the maps.
Yeah, and I give a couple of opinions, Nick. I think an employer would know if their premise was in a Freeport area. I'm not aware of a postcode type aspect, but the Freeport area is a kind of defined area, so you'd know potentially through that you're there or not. I think it's going to be much clearer, and I don't think you could say it's just oh, well, I just happen to be a quarter of a mile of this sort of map area, and I've got totally unrelated business in relation to the Freeport, therefore I'm captured by Freeport. I think it's much more you are operating in the Freeport. That's just sort of opinion, but you're quite right. You have to spend 60% of their time working in the Freeport tax site, and the only adjustments to that are relating to whether they've got disability, pregnancy or maternity. So you don't have to be working to get the NIC reliefs on that basis, because you've got a reason not to be there, but otherwise you have to be. And I think the government give examples of those who may be home workers. So if they're a home worker for, I don't know, 59% of the time, and they're home 41% of the time, you don't qualify for the Freeport NIC reliefs. So there may be a lot of toing and froing as this comes in. I'm not actually aware of any of our clients operating Freeport yet. We built in the capability, it's there. Been the same with veterans. I'm sure we've got a number that use veterans, but the Freeport, I'm not sure we have any that I'm aware of, although the capability is there. I think there'll be adjustments. People would be having to adjust at the end of year, operate ordinary. Plus, it's limited to £25,000 per year, isn't it? First £25,000 worth of earnings. The enterprise zones is slightly different, I think, isn't it?
Is this something then that they can ask the HMRC? Would they have a response if the employer is not aware, if the employee doesn't know? If they only, you say they should know, but if they don't?
No. Well, I think yeah, my instinct is they should know because the Freeport is established and they're part of it. So so my gut is if you don't know you're part of a Freeport and you're having to look at a map, you're probably not. Is that a fair assumption? Do some of the others think? But I think if you're operating in a Freeport, you know you're operating in a Freeport.
Yeah,
Sure.
I've certainly not seen any other form of support other than the maps. Personally, I don't think the maps are that bad. I think it's just relating where you are within the cached zone is the complexity.
Samantha?
I'm not sure if it was mentioned in the question, but just to sort of flag that it is only for new starters as well. So it's not to say that all their employees then get to have X amount of national insurance relief. It would only apply to new starters from the beginning.
Really good point. Really good point.
Yeah.
We're getting some questions on pensions. We've got 8 or so minutes left. Are there any? I know we're rushing through here, and quite deliberately so, because I want to make sure people do get their pensions questions answered. And there's a couple that have come in. Anything you want to add on green free ports in Scotland and Wales or growth zones for the moment? Was that question help just?
Well, I think
where we are?
yeah, only that new ones have been announced in the past couple of weeks, so they are being revealed all the time. So although we've had the NIC reliefs around for a while, we didn't actually know where they operated. Well, now a number of them are reported, and we've had a couple announced recently in Scotland.
Okay. Well, let's move over then to you, Andy, on the pension side. I've got a question that's come in straight away here as well for you. Can companies change the way they administer their workplace pension scheme at any time, i.e. making it a tax relief at source? What should the change process consist of?
Right, if you're changing, so lots of thoughts there really. First of all, if you do speak to your pension provider first to make sure that the rules of the pension scheme and what you want to do as an employer are in sync. So maybe the rules need to change. If you're going to start changing the rules and you've got more than 50 employees, you may need to go down consultations. You may have a period of consultation saying we're now going to change the scheme, and which can be you're changing the scheme completely, going from one pension provider to another. So you look to see if you need consultation to take place. If it's a salary sacrifice you're going to want to put in, then obviously, as I say, speak to the pension provider, say this is what we're planning to do, is this going to be acceptable from your perspective. Then you're going to take your employment law advice, you're going to introduce a change to the contracts, because that's where the salary sacrifice comes in. Because what you're doing from a pension perspective is you're going to an employer only contribution setup, because the employee bit is no longer there because they're giving up part of their pay in exchange for that additional employer contribution. But you will have some people, maybe near national minimum wage, who will then go from salary sacrifice to normal contributions. So you just need to make sure that the scheme is set up to understand that sometimes you're going to get an employer contribution only, and for some employees you're going to get a normal employee and employer contribution. 5%, 3%, whatever it might be, based on the scheme rules. So
I'm thinking,
yes.
I was thinking, Andy, sorry, if I supplement the question a bit. So I'm thinking to fulfill auto enrolment requirements, an employer just needs a scheme in place. If they changed it every week to a new supplier, that wouldn't be a breach of the law, would it, potentially? as long as they've got a qualifying scheme in place. It's just
that can be used for automatic enrolment.
yes,
But
and that could
if you
from
change
MPA to RAS, and RAS to MPA,
yeah.
and MPA to RAS.
But there is a rule that says if you, as an if the employer makes the scheme they've got at the moment no longer a qualifying scheme, or which could be because you're closing that scheme and you're opening a new scheme with a new pension provider, there's an immediate re-enrollment requirement. So which in simple terms is whoever's in the scheme, in the old scheme, now needs to be put into the new scheme immediately. And you've just got to think, but most people would do that contractually. So most of the time, an employer would say, if you were going to change, like from Nest, for instance, to Now Pensions, or from Smart to People's Pensions, wherever around it might be, then you would be consulting. If it's more than 50 employees, you'd be saying, this is what the new scheme is, this is what the new rules are, and so on. So it's a big thing, and you should definitely take legal advice before you do all that sort of stuff. And potentially, even if someone said, I don't want to join a new scheme, immediate re-enrollment would make you put them in to that new scheme, and they'd have to opt out under automatic enrollment rules. So
can you tell us a little bit about the government review that's due to be published in due course, and how employers should be planning for this, Andy?
There'll certainly be a lot of information given out beforehand, but this is where the automatic enrollment review is coming up. DWP is saying it will be the mid-2020s, so 25, 26, maybe that sort of tax year, whereby the automatic enrollment age will reduce from 22 down to 18, and the lower earnings threshold will be probably abolished, so in effect nil, so that all contributions will be from pound one upwards, perhaps still with the upper limit in place. So whatever April that takes effect from, you're going to have a lot of people potentially being enrolled, those between 18 and 22, and also you're going to be paying more as an employer and more as an employee if you've got a scheme that has the banded earnings set up, so it's qualifying earnings between the lower limit and the upper limit. If your scheme is just basic pay and from pound one upwards, then it won't have an impact as such. Apart from the scheme needs to be qualifying. So you will find that your scheme still needs to be qualifying, and how you determine what a qualifying scheme is will be tweaked because of the fact that the lower threshold has gone. So we need to find out. So when all the information comes out and it'll be consulted probably by DWP, we'll have an understanding of how you know that your current set 1, set 2 or set 3 schemes, which hopefully you'll know what I mean by that, but it's a way of saying that I've got a pension scheme which is basic pay only from pound one upwards, and I'm paying 4% employer and 5% employee at the moment. I know my scheme is qualifying. But when the lower threshold goes to nil, then it may be that the contribution rates or something else needs to be tweaked. We'll find out what that means. We don't know yet.
Fine. So watch this space. We'll definitely be bringing it back to a future PQT. So last couple of questions here, just to finish off the show, really, to make sure we've got through everybody. I'll come to you, Samantha, briefly. Is it a requirement to show SSP payments on wage slips if they are paid company sick pay?
No, I think probably Simon alluded to this earlier with the question around the sick pay expiry. No, it isn't. I know a lot of people do. It just makes it easier to keep track of. I think that's probably the history behind it, in all fairness. But no, it isn't a requirement.
Super. And back to you, Andy. When an employee is on MAP pay, we use a notional pay item to calculate the pensions. Is this correct?
So in terms of employer contributions, first of all, what does the scheme require? What are the scheme rules around maternity leave? So you need to make sure you comply with that. Then you need to make sure you comply with legislation. Legislation says the employer contribution is based on the pay the person would have had they not been on maternity leave. So, that's where you could use a notional. That's where you could use a notional pay to track the employer contribution. The employee normally just pays on if it's salary sacrifice, it's going to be that notional pay that you can the E and the E being the salary sacrifice amount, will be calculated on. If the individuals just pay normal contributions, then they normally pay their contributions based on the pension pay they're actually receiving every pay period.
Super, fantastic. Well, listen, I want to take this opportunity as we close the show today to let everyone know the devolved government section we will include in our next PQT with relevancy there, and that'll be updated. So if you were waiting for that section, apologies we didn't get to it today. We will let you know what the latest is in relation to devolved governments and the impact on bereavement and amendments for early births in our next PQT if we can. To remind everyone, the next one is on the 24th of February, so please do sign up early. 160 of you here today, which is fantastic to see. You can email your questions to us in advance, or of course let us know on the show. I want to take a huge thank you opportunity here to say thanks to Lou Gray, Samantha Johnson, Simon Parsons, Anne Nichols and Richard George for being our expert panel. Find them on LinkedIn, get connected to them. They're absolute payroll experts and they will love to answer your questions on the next PQT as well, so do send them in to us in advance. And just a huge thank you. We look forward to welcome you all on the 24th of February for the next show. Thank you everyone for joining.
Thank you. Bye.
Bye all. Bye.
Bye.
Bye.